What's up, guys? It is the Saturday after July 4th week, and we are looking at the stock picks for next week. We saw how the market ended, and we're going to go ahead and make the predictions for the week of, I guess it would be 13th of July. As always, we're going to be using three free websites that allow us to do a decent analysis of the technical indicators of stock. The first is Yahoo Interactive Stock Chart. Then we got StockTA.com and StockCharts.com. So I've already done the analyses and chosen these 5 stocks. And we're going to go through each of them and look at why we are being bullish on these stocks for next week. So the first one is Dollar Tree, DLTR, Dollar Tree. It's a loan company. They do payday loans. Basically, they make their money by parasiting off of these poor people who can't really afford life and they need money right away, and then they pay extreme amounts of commissions or interests on those loans that they get. It's a pretty decently priced stock. We're going to go ahead and look at the candlesticks for each day and see if there's anything interesting. Now, unlike most of the stock pick videos I've made, this one doesn't do much of a candlestick analysis. We're using more of the technical indicators and the support and resistance for these picks. So let's take a look at Dollar Tree. It's pretty even. It's been even for the past month or so. It's important to know where the support is. It's right below where we're at. So actually, what happened yesterday, or what happened on Friday, was that the support was broken. The resistance was broken through and it became a support. Prior to that, we had this level that was keeping us below 79.48, and now we're above it. So what that's going to do is it's going to give us downside protection. The stock is probably not going to fall under that value, and as you can see, that's a pretty strong level. So now that we're back above it, and the Fibonacci's are bullish, we are pretty confident that we are protected on the downside. In addition to that, we don't see any resistances above us that are significantly strong. So there's really no limit to how far we can go upward. Now the question is, will we go upward? Well, the candlesticks don't really show us anything. But what we're looking at here is the slow stochastics, which tells us if the stock is oversold. It also gives us buying and selling signals. Rune lines also give us those signals, but I don't think it's going to be useful in this case. We'll take a look anyway. And then the accumulation distribution line, which allows us to see if a trend is in place and if there's still momentum in that trend. Now, obviously, it's not going to apply for the Dollar Tree because Dollar Tree has been trending sideways. The stochastics don't really tell us much either, nor do the rune lines, and the accumulation distribution lines pretty much even. So none of these indicators are very strong. This was in retrospect, now that I'm thinking about it, this was a pure support play. Now that we've broken the support and there's no real resistance above us, just statistically, this is a good play because we've got downside protection and no real barriers above. So if the market becomes bullish and a rising tide raises all ships, you would expect the Dollar Tree to go upward. And if the market goes downward, you wouldn't really expect the Dollar Tree to go downward because simply we've got that strong support below us. And the Dollar Tree makes its money off of poor people in hard times. So that's what you got. That's the Dollar Tree. Alright, so we're going to move on to the Dish Network now. Dish and Dish. Dish Network is kind of like Netflix. I'm not really sure. I'm not a big TV guy. I don't even have a TV. But they bring TV into your home somehow. Alright, so we don't have any important candlesticks here. We have an overall bearish trend bringing the stock downward. Candlesticks don't tell us much. The support and resistance that are above and below us aren't really significant in their strength. We have a bunch of resistances above us, in fact, but they're all pretty weak, except for the 70. So our we've got two possibilities. If we are bullish on this stock, we got two um, significant possibilities. One is we go up to 70 and we kind of stay there. In that case, if we see that the resistance of 70 is not getting broken, we get out. And we'll take about 2 or 3%. Well, I think it's 3% ROI if we hit 70 from 68.81. Might be 2%, I don't know. So that's what we got as a price target, as a low price target. If we break that, then we have all these weak resistances that can possibly turn into strong resistances, or alternatively could be broken and become supports. Now, what's important about the Dish Network is that it was recently oversold. It's been oversold for the past month or so. And the stock dipping below that oversold level, which is 20, the 20 line here, means that what we really have to do is we have to wait to see a significant cross of the black and the red line. We saw a strange kind of crossing here, but they were more or less even with one another, and we didn't see a significant breakout until this point. But you want to see that the black line is really moving outside of the 20 zone before you buy in and consider that a buying signal. Now what we're seeing in the past couple days is the black line really is breaking out of the 20 zone and it's going above the red line. And it looks like a good time to buy, because what that means is the stock is oversold and the market is noticing it, and we're probably going to have a trend of a reversal of that downward trend. And if that reverses and we break that 70 resistance, we can go quite high on this stock. I like these stocks like Dollar Tree and Dish Network because they don't really have any barriers above them, and you don't know how high they can go. If we see a bullish trend in a stock like this, it's pretty good to get in because new highs often bring new highs. In terms of the Arun lines, we don't see anything significant. Accumulation distribution line has been pretty much even for a bit, but you can see it's turning upward, which means that the trend is either weakening, this downward trend is either weakening or starting to reverse. So this is a pretty decent speculative play. That's Dish Network. We're going to move on to Gene. Gene is an ADR, which means it's a foreign stock traded on the US stock market. This is actually an Australian stock. Like its name, the company does genetic, I don't know. Let's take a look at what it does. Some sort of genetic medicine. They provide genetic testing services. Okay, so genetic tests for cancer, basically. A company like this will be successful if they can get their tools into clinics and into hospitals. And because it's a penny stock, anything lower than $5 is a penny stock. Because it's a penny stock, you should probably do your due diligence and look into this stock before you invest. Now, I should give you some disclosure. I'm actually invested in this stock, and I have been for a while. I've used this stock to play penny stocks in our penny stock newsletter. I'm going to show you the results. I think we have an image. We did pretty well, but I'm still in this stock. I rebought because I think it is pretty decent in what it's going to do. So we got in at we got in January the 30th, and well, I don't see any results here, but we got in January the 30th, and if you want to go all the way back and look at January, we got out around here when there's this kind of pump and dump spike price. So getting in January gives us like a $2 entry point, and we got out. We didn't get out at $10. That would have been nice, but we got out around $6, which is 600% ROI or 300% ROI. I think in the long term, this is a pretty decent stock. Some people think that there's going to be another pump and dump, and in that case, you don't want to hold on to it. You want to see it spike and then get out if you buy into this as an investment. But we're doing a swing trading video here, so we're just looking at the short term, and the point here is to look at what's going to happen next week. And here's what I think is going to happen next week. Even though we have a bearish trend in the long term, we have a high volume. You can't really see, but there's a volume bar below this. We have a high volume, so there's probably some news event, announcement of a new CFO, and that's going to bring more investors into this stock, which is going to push the stock price upward. Now, we've got a really strong resistance above us, and that's going to be hard to break. What's most likely to happen is if this stock continues or reverses and starts to go upward, we will probably hit this resist and maybe we'll break it, but it's pretty unlikely. If we don't break it, your best idea is to get out at this point. If you get out at that point, you're going to be making 83 cents on every 293 you invest. That's going to be an ROI of almost 30%. So if you put in $1,000, you'd come out with $1,000 with an extra $300. It was a pretty good bet. And if you want to be in this on the long term, obviously you just get out at the resistance and then you set a limit order above that resistance. So I would, for example, if you believe this resistance is going to be hit and you want to get in now, buy it now, and immediately after you buy it, set a limit order to sell the stock when it hits 3.76, and then your brokerage will automatically sell it when the stock hits that number. After that, once you've sold off, if you think that Genen's going to have another one of these $10, $11 pump and dumps, what you can do is you can set a limit buy for 3.77. So once you know that Gene has broken that resistance level and the sky is now the limit, you can have your brokerage automatically buy that stock. So that would be a decent play. Now, Gene has been oversold for a long time. It's been under this 20 line for a really long time. Technically, it's oversold, but because the volume is so goddamn low, nobody really cares. Nobody is really looking at this stock. Now we're seeing a little higher of a volume, and if that continues, the market will correct this oversold scenario. As you can see, the black line has broken over the red line, and that gives us a buy signal. It's often safer to buy after we're out of that 20 area, but in this case, you might want to get in now when people are starting to notice the stock. Everything else doesn't look so good. You can see the rune line, the greeted rune line, is starting to encroach upon the red one, but that's not often something that happens for the long term. As you can see, there's a small triangle here, and it goes back downward. The accumulation distribution line says that that bearish trend is still pretty strong in momentum, so that's kind of a second opinion on this trade. But overall, I think Gene's going to be a pretty decent swing trade, at least for the short term, until it hits that resistance level. All right, next we're going to look at two ETFs. The first is IWM, which is it M? Yeah, this is on the Russell 2000. So it's on smaller companies. Again, the candlesticks don't show us anything interesting. As you can see, most of these candlesticks we've been looking at have been a couple of red ones followed by a big green one. This just could be what happens in the market with all of this shit with China and Greece. Finally, people are starting to gain more confidence in the market, and you're seeing these higher green candlesticks in a lot of stocks like this. So, unlike most of the past videos I've made on weekly stock picks, this one doesn't really pay attention to what the candlesticks are telling us because they're really not telling us anything that has a statistical pattern associated with it. That's why we're looking at these other indicators. IWM and another IWM. Alright, so where are we at in terms of support and resistance? We've got a strong resistance above us, and I'm hoping that and believing that the resistance is going to be broken, which is why I'm getting in on this. We have a lot of supports below us, a lot of places to test if the stock falls, but more importantly, we should be testing this resistance and hopefully testing this one later after that. Alright, again, like most stocks we've looked at, this ETF is oversold, and we're starting to break out of that oversold region. Now, the red and black lines have not deviated yet, but if that happens and the black line turns upward, we've got a pretty safe buy signal. I'm going to say to get in on this while it's getting out of that oversold region and not too late. If you'll notice in the past, if you were to just trade based on the stochastics, whenever it touches or turns around from the oversold territory to the overbought territory, For example, if you bought here when the black line begins to go above the red line down here, and then you sold, so let's say you buy around 116, 117, and then you sold when it started to dip down below the 80 level, you'd have made a profit. And then again, you buy when it leaves the overbought level and crosses over the red line. So you'd buy around here, 122, 123. And then you get out when you see the black and red line deviate and the red line goes across in the overbought level. So around, hopefully on this day, you can get in or get out. Do the same thing, buy here, sell here, short here, buy here, and we're going to buy again. So if we were just following the stochastics, we would have made a profit on every trade we've done. So we're going to do that here as well. The accumulation distribution line is telling us that we have an overall bullish trend, and that's still relevant right now. It's kind of evened out, but you can see it's kind of curving upward at the moment. So this is a decent trade, and most important is this oversold aspect of the Russell 2000s. We're going to look at another ETF. It's called EFA. EFA gives you exposure to foreign stocks. Most of them are not Chinese. Most of them are like from, we can take a look in a second, but I think they're from like Germany and Australia. Take a look here. So if you want some exposure to the foreign markets, this is a pretty decent stock to get into, decent ETF. You can always check the holdings to see what this is holding at the moment. As you can see, each holding is only 1%, so it's very diversified. But look at where these are from. This is, what is L? I don't know L. I don't know PA either. That's Germany. Oh, L is Dutch, I guess. And this is Australia. So you've got a lot of foreign exposure in this ETF. Let's go ahead and look at the chart for EFA. And I think, again, the candlesticks will not tell us anything. Okay, this is a gappy stock. So in this case, this is actually a really good swing trade stock because it jumps all over the place. But you can't tell much based on these candlesticks because everything's a gap. Here's a gap, here's another gap. There's a gap from here to here, from here to here there's a gap, from here to here, from there to there. It's just not a reliable indicator. The candlestick is not a reliable indicator in this instance. So we're going to look at the other indicators. We see we have a support right below us, a support that we've just broken actually, which was a resistance before Friday, which is a good sign. In addition, okay, so again, like most of these trades for this week, we are in the oversold region and we're just about to break out of it. The black line has diverged from the red line. It's above the red line. And the accumulation distribution line, while bearish for a while, is now starting to turn around. So we're probably going to see an upward trend in EFA, even though it might be gappy. We could get pretty close to that highest resistance, which is the highest significant resistance, which is 67, and that would be a pretty decent profit, I believe. So you might want to even hold on to this until you see it get into overbought territory. I think a lot of ETFs I notice, and even the stock market in general, like if you look at the SPY or the QQQs, you'll see that the stochastics are really actually quite strong for predicting trades. If you were to buy here and then sell here, for example, you'd have made a profit. Again, down here you buy, up here you sell, you've made a profit. Down here you buy, up here you sell, you'd have made a slight profit. We're seeing that again. We're in oversold territory. It's probably to get up to a peak again, and at that point you sell and make a profit. You could just trade this forever if you wanted to. Because it's gappy, it's highly volatile. I'm going to put these trades up here so you can see them once again. Dollar Tree, Dish, Gene, IWM, which is the Russell 2000 ETF, and then you've got EFA, which is the foreign ETF. Those are the stock picks for this week. Please subscribe and you'll get updates whenever I put out the next week's stock picks. And if you have any questions, leave them in the comments below, please.